we're going to review 3 very important keys that you need to understand before you begin the process. These 3 keys are non-negotiable. If you're planning on working with an advisor, which we definitely recommend because you only have one chance to get this right, these 3 keys are critical to ensuring you're working with someone who can execute this process effectively. Even if you're planning to try and do this yourself, which we don't recommend, you're still going to have to rely on third parties to help you implement each of the different pieces of the puzzle as you go. So even if you're a do-it-yourselfer, these 3 keys are still critical in vetting each of the individuals you're going to end up having to work with. So here are the 3 keys. Key number 1, truly independent. You have to be working with someone who is completely independent of any significant conflicts of interest. This means they cannot be affiliated with any of the following: a bank or credit union, a broker-dealer, a money manager, an insurance company, or a mutual fund company. Now that's not an exhaustive list, but those are the main ones to look out for. Unfortunately, the vast majority of advisors are in fact affiliated with one or more of these types of organizations. This is because many advisors are simply glorified distribution channels for certain products and services. But if you look hard enough, you can find advisors who aren't. I assure you of that. Even with the best of intentions, if these affiliations exist, it will likely taint the advice you receive, and you won't know the difference until it's too late. Objectivity is the key here. We do not believe it's possible to be a truly objective fiduciary if any of these affiliations exist. So that's key number 1, true independence. Key number 2 is to find someone truly comprehensive. So often the retirement planning process focuses almost exclusively on investments, with all the other issues being nothing more than an afterthought or asterisk. This is a huge mistake. An effective retirement plan must include each of the following crucial areas. Number 1, investment planning. Obviously, this is very important, and we're not suggesting it be omitted, but it's not the end-all, be-all. Number 2, income planning, which, contrary to popular opinion, is very different from investment planning. As you'll see, a really good, reliable plan will identify where every bit of your income is going to come from in every single year of your life for the remainder of your life. That's very different than simply investment planning and assuming income will be there. Number 3 is tax planning. This is long-term tax planning, not just what should I do this year or next year to reduce my tax bill, but how do I look ahead and minimize my taxes over the next 30 years of my life and potentially into the next generation. The 4th issue is healthcare planning. This involves 2 major areas. 1 is Medicare planning, understanding the system and making sure you have the best coverage for your unique situation. The 2nd is planning for the cost of potentially chronic long-term needs, such as home care, assisted living, or the need for a nursing home stay. And then lastly, number 5 is survivor and estate planning. Survival, if we're talking about a couple, is what happens if one of those 2 people dies prematurely. The 2nd piece of the puzzle is what happens when either both of them are gone, if we're talking about a couple, or if an individual dies, what happens upon their death. You must consider each of these 5 critical areas because they all interact and affect one another, which we'll explain in detail as we go along in this video series. So that's key number 2, truly comprehensive. There must be an expertise in investment, income, tax, healthcare, and also survivor and estate planning, because your plan must encompass each of these 5 areas. Now, last but not least is key number 3. They must be truly focused. You have to work with someone who specializes specifically in retirement planning. I cannot stress this enough. Unfortunately, most advisors are generalists, trying to be all things to all people in order to cast a wide, broad net in order to gather as many assets as possible. Because that's how advisors get paid. They get paid on managing assets. And just like in the medical industry, there are generalists and specialists. But you certainly don't want your GP performing brain surgery on you, do you? That's the same for financial advice. Find someone who specializes in your specific time in your life.